Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. It's May 9th, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down the trade action following the May USDA WASDE report. First order of business here, let's see the changes on the day. As you can see here, corn down 8 3/4 on the old crop, new crop down 12.5 cents. We had old crop beans leading to the upside toward the close, trading 16 cents higher. Not nearly the strength on the new crop, up just 2.5. Chicago and Kansas City wheat both moving lower, down 12 cents in Chicago, off 14 cents in Kansas City. Cody, let's take a look at those balance sheet numbers here today. Certainly some surprises out from the USDA.
Yeah, absolutely. And when you look at corn, we expected about 1.67 billion bushels of corn for that new crop ending stocks. We came out with 1.72, so we actually had higher ending stocks. I think that put pressure on new crop corn contract early on after the report was released. For soybeans, we expected around 307,000 or 307 million bushels. We got 330, so that was pretty sizable. Yeah. Of course, soybeans for that new crop contract, it finished up 2 cents. I think for the most part, we did have some selling pressure, but like what you were talking about before the show, that new crop contract, a very interesting price action. Certainly not expected immediately following that report, but that really stood out to me. The soybean front month contract rallying sharply. Why was that?
If we just look at the balance sheet, we had ending stocks revised 5 million bushels, but there was a lot of activity on that balance sheet. We saw imports raised, we saw exports raised. So that creates a situation where there could be a lot of volatility in the domestic cash market. Anytime we see that, I think it lends itself to positive price action as traders are concerned about old crop carryout as we move through the summer months. As we remember last year, cash markets got really out of hand during the summer months. We saw plus 200 basis on old crop beans. So I think cash traders and future traders kind of have that in the back of their mind as well. If we turn our focus to the new crop, though, as you said, Cody, we had quite sizable ending stock expectations. 330 million bushels, and so in general that creates a quite negative outlook for soybeans here moving forward. USDA projected a low side on-farm price of around $9.75, so certainly not a lot to get excited about there, but I think in a day where we see old crop beans trade up 22 cents at one point, certainly helping out that new crop contract, and really active spreading today is what it seemed like.
Yeah, really that reemergence of the bull spread today in a very big way. Right. Where they're buying that front month, they're selling the deferred. So that was very interesting. If you guys want to take a look at spread charts, we can set you up with a demo of the trading platform, and you can take a look at them for yourself. Let's just cover wheat here since we have we didn't quite get there. 559 it was expected. 559 million bushels was expected. We got 540. So you would expect this to be a little bit bullish. What was your take? Why do you suppose wheat wasn't able to kind of participate in the rally?
We did have weakness out of corn today. That's not going to help out the wheat market. And if we look at the numbers today released in terms of those new crop ending stocks, as you can see, they were about 19 million bushels below what the trade was expecting. But the information that we got today from the USDA really seemed largely like a confirmation of information that's been traded on for the last month and a half. We saw Chicago wheat trade up about 60 cents since mid-April. So I think in light of these numbers, people were a little bit hesitant to push this market higher, considering how far it's come. And the information today wasn't a lot of new information, more just confirmation that we are expecting a pretty darn lean crop here domestically for the new crop.
Absolutely. And when you look at wheat, really it's been trading more on a weather market than on this sort of WASDE report. Yeah. I think this wasn't too far outside the norm. Right now it seems as though wheat is in some sort of consolidation pattern after a pretty sharp move. So I think part of what we saw was just a little bit of consolidating in a trading range. But we do have some administrative stuff here to pay attention to. CME Group did change their margins. Logan, if you could go over that, that'd be...
Yeah, absolutely, Cody. As you can see here, the first column here shows current margins for corn, soybeans, and wheat. As you can see here, for corn, maintenance margins are going to be lowered by $250. Soybeans and wheat are both seeing larger margin requirements. When looking at these margin requirements, they're largely based off the volatility and the prices of the underlying contracts. So understandably, the CME group is raising soybeans and wheat while lowering corn. These changes will be in effect at the close of trading today. So when trading opens up Sunday night, these new margins are going to be in effect. You can visit the Grain Hedge website to see a full breakdown of current margin requirements if you're interested in taking a look at that. And if you want to see the open of the overnight trade on Sunday night, as Cody said, you can visit us over at grainhedge.com. You can take a no-obligation 2-week trial of our trading platform, get live quotes in your home, and see what the reaction from the trade is like on Sunday night as traders have the weekend here to digest these numbers. As I said, visit us at grainhedge.com if you want to take a look at that, or as always, call the office, 877-472-4607. Thanks a lot for joining us here on a Friday afternoon to break down the USDA report. We'll see you back here on Monday.